This video will take you through the process of entering a debt reduction, investing, or retirement plan using Financial Mappers, which you can share with your advisor. The aim is for you to enter your ideas and then ask your financial advisor for advice, referred to as limited or scaled advice, on any area where you need help. In this example, a client plans to purchase an investment property now and would like some recommendations on how to invest the remainder of otherwise investable funds over the next 20 years. If you have not already done so, it's important that you familiarise yourself with how Financial Mappers works. Working through some of the simple plans is a great way to start together with watching the videos on the link given to you by your advisor or broker. When you're ready for a more advanced instruction, join our Financial Mappers YouTube channel. This way you'll be updated with new videos as they're published. To get started with Financial Mappers, your advisor sends an email inviting you, their client, to click on the link displayed in the red box, which leads you through the registration process for your Financial Mappers account. After your password is accepted, click on the Login to Continue link, where you can enter your email address for your username and password. The first time you open your account, you should complete the account details for yourself and your partner if applicable. We advise that first-time users should click on the Practice Plan. This is a plan which has been created so that you can quickly check out some of the functions of Financial Mappers. You can also download a PDF on the Sample Plans page, which will help explain how to get started with practice plans. By clicking on the Sample Plans menu option under your name, there are a number of plans and tutorials. Working through these will help you understand the planning process in Financial Mappers. This will enable you to engage with your advisor and work together to build the financial future you're looking for. When you're ready to start making a plan for yourself, we recommend you complete the information in the starting position. This information can be used to pre-fill any new plans as desired without having to re-enter it. You can reset this to blank or edit the previously entered information at any time. When you're ready to create your first plan, you can select either a new blank plan or new plan from starting position, in which case that information will be automatically downloaded into the plan. The plan name and type, as well as other descriptive details, are entered, and when the Save button is clicked, your new plan is created and shown as the heading in the Plan Management area. Now, there are a lot of elements to consider in a Financial Mappers plan, and the following examples are just a few of those to get you started. One of Financial Mappers' features you should utilise is the Insurance Needs Report, found under the Reports chevron. The Insurance Needs Report gives you a snapshot of your finances for the first 3 years of your plan. Note that you will need to have entered your actual or intended insurance cover in the starting position, or on the planner page first. You can then complete some additional information about your intended lifestyle choices, and the report will calculate your projected cash flows and access to liquid assets in the case that you suffer an adverse event, which prevents you from working in any one of the first 3 years of your plan. Your advisor will require this information because they need to consider how you will meet your loan payments and manage your investments if you are unable to work due to illness or injury. In this example, the plan owner is thinking of purchasing an investment property. As they're looking to borrow $400,000, they use the loan comparison calculators found in Handy Quick Calcs on the planner page in the Plan Management area. In this example, there are 2 loans with different interest rates and loan costs, and the total outlay of both loans are compared for a 20-year loan and a 25-year loan. Say you're intending to purchase an investment property costing you $500,000 with a $100,000 deposit. The program calculates the loan amount at $400,000. When a new loan is created, the program defaults to a 20-year principal and interest loan with no loan costs. To change the loan details, you must click on the link, which is the underlined word Investment Property 1, Loan. When you first enter the created loan, you can change the loan type and other specifics of the loan if you have them. If you don't, just leave the default rates for now. Your advisor will guide you through the process of how much you can afford to borrow and the best way to manage your loan. They may also make sure that the property has suitable returns and tax advantages for your particular circumstances. Before sending the plan to your advisor, you should do a final check by reviewing the key indicator graphs. This is one of the reports accessible by clicking the Reports chevron in the Plan Management area. These graphs display your salary and the percentage of it allocated for investing for each year of your plan, your investment allocation amounts for each year of your plan. Note the red columns and how much you are spending on loan expenses each year. Currently in this example, the remainder of investable funds have not allocated to other asset classes apart from the transaction account. Finally, you need to check that your transaction account has sufficient funds to pay for your deposit and loan expenses. That is, that its final balance for each year is above zero. You will need to ask your advisor how you should allocate the money currently being assigned to the transaction account, which is that shown in the blue column in the top right-hand chart. When you're ready to share your plan with your advisor, click the My Plans icon at the top left of the Plan Management area screen. On the My Plans page, click on the Manage Sharing button on the same row as your plan name. Select your advisor's name and click the Share button. And enter a message which will be emailed to your selected advisor, inviting them to review your proposal to purchase an investment property and advise on how you should invest the balance of your investment allocation. You can stop sharing the plan with your advisor at any time. Remember that while you have full access to Financial Mappers to create your plans, model what-if scenarios and print reports, your advisor only has access to the specific plans you choose to share. Your advisor will now review your shared plan. They will make recommendations on how to allocate your investable funds over the next few years. This is a good starting point because when you get more complex financial situations in the future, you may need to ask for further assistance. Your advisor will then send you an email advising you that they have amended and shared that amended plan. When you open your Financial Mappers account, click on the button Plans Shared with Me to see any plans your advisor has shared with you. When this happens, you must make a copy of the advisor's plan. After that ownership transfers to your copy of your advisor's plan, you can modify your copy as you see fit. Note in this example, the advisor has edited the name to Canon Plan 2018 Amended. After the copy is made, Jim can review the proposed purchase of managed funds. In the same way, plans can be altered and shared back and forth between client and advisor many times, and both parties should develop their own naming system to keep track of the plan trail. Visit your user guide for more detailed information about using Financial Mappers.